Here we go. Okay, I'm going live. All right. Good evening, everybody. Make sure things are working here. All right, I'm live. So, good evening. John here again from Option Engineer. It's been a little while since I've gone live, and I apologize for that. Life is always busy, but I'm going to make a commitment to going live at least 2 or 3 times a week just to kind of catch up with you guys, see how things are going, and share how my experiences are going. Because one thing that I said from the get-go is that I wanted to share not only what's working well, but what's not working. And this is probably going to be one of those quick lives. I have survived through the expiration cycle here through April's expiration, but I did not come out without any damage. So, like I mentioned, I want to be transparent with what I'm sharing here on on Option Engineer. So, my IT wifey is saying I need more light on me. So, what we're going to do is just go into my trade journal real quick and show you guys the damage toll from this past expiration cycle. Let me pull it up here real quick. And let me make myself small. All right. So this is my trade journal that I track on Google Sheets. And if you guys like what you're seeing here, feel free in the description below. I have a free sign up where you can come in and download it and use it going forward. But again, just by tracking your trades the right way doesn't necessarily mean they're all going to work out in your favor. So what I like to do on Options Engineer is share with you how my actual performance is going. I don't put all my investable assets into this one account, and so being able to show you what's working or not working on my $10,000 account is fine by me. So if we look over here, my account value over time, I was sitting pretty high, and I thought I had this thing all figured out. I was up about 8% over the course of a couple of months, and I proceeded over the course of the next expiration cycle to give a lot of it back. That was a little bit of a humbling experience, but I did take a lot of lessons away from that, and I'll share those in this live. As you can see, I still haven't lost any of my original investment, but I definitely had a bit of a struggle there towards the end of the month. So let's go ahead and go into some of the lessons I learned from this past expiration cycle, and then we'll dive into the platform and kind of show what I want to do on these lives is to at least go through the recent trades I did and share with you kind of what my thought process is and what my lessons learned were on those. So when it comes to my lessons learned from this last expiration cycle, it was my first real experience with gamma risk. And if you guys aren't aware of what gamma risk is, it's essentially not to get too mathy on you, but it's the acceleration of how delta impacts your portfolio. And just to take a step back, so delta is obviously your directional risk, how much a change in a dollar in the underlying that you're holding is going to impact you on a dollar basis in your account. So now, what does that mean when you say increase the acceleration? So as a contract gets closer and closer to expiration, every individual tick up or down is going to have almost an exponential impact on your profit and loss. So in that final week of expiration, it was a little bit of a nail biter at times because I had some positions that were a little bit on the fence, and every tick down I would feel it, and every tick up I would feel that as well. So one of the tenets that Tasty Trade recommends and teaches is to manage your trades earlier, around that 15 days till expiration mark. They do say that on defined risk trades, there's not a whole lot for you to do, and that was the vast majority. That was all that I had going up into expiration week. Unfortunately, I just picked some bad directions along the way. So I learned about gamma risk. So going forward, I'm going to look to close my trades earlier, potentially roll them for a credit if possible, and I'll get into a whole separate video about why you would want to roll in for a credit. And I see that we got some people watching here, so guys, leave a comment. How did you guys do on this last expiration cycle? How did you make it out of April? If you have any damage to report, feel free to put it into the comments. I'd like to get the conversation started. Another lesson I learned was that undefined risk trades, while I was afraid of them originally, I'm much less afraid of them now, and I'm actually excited to be able to start putting on more of these undefined risk trades in future expiration cycles. Um, Definitely the ability to increase the probability of profit is nice. That's not really the main reason why I'm looking forward to being able to use them, though. For me, the defined risk trades, obviously you're going to pay more commission because you have a long option there to hedge your short option and make it that defined risk trade. But with the undefined risk, I like the ability to roll out in time and be able to collect credits along the way. That continual chipping away of cost basis is what really attracted me towards options trading in the first place. And thanks, Susie. And so being able to continually chip away at your cost basis is important. That's what really sets this art, this science, apart from other ways of trading the stock market. So with defined risk trades, I felt like I had shackles on the vast majority of the expiration cycle because my positions weren't in that magical situation where you could roll for that credit. So you'll see some of those trades in my portfolio today. Another lesson learned is that I'm terrible at picking direction. I don't believe in technical analysis. I might use it just if I need something to tip my hat one way or the other to choose a direction. But I feel like this is the same for a lot of people. When you feel strongly about a direction, that's when you're going to be wrong. And so focusing on the math, focusing on the statistics, focusing on the probabilities, and picking directionally neutral strategies is definitely going to be that driver that I use going forward, which you'll also see in my positions I have that have been placed on after the expiration. So with that, those are kind of my lessons learned. If you guys have any lessons you learned from April or anything you want to share, feel free to put them in the comments. But with that, let's go ahead and pop into my platform. I'm still using the web platform because as a part of my trade journal process, I'm experimenting with how I want to track my trades long term. I'm using the trade journal as one of my alternatives in the platform now. So what we'll do is quickly go through, let's just go through my positions here, and I'll talk through some of it for you. So I'll sort these by my winners. Let's at least start out with a good conversation. And my winners right now are my strangles. So like I mentioned in my lessons learned, I've already taken those to heart and begun to get away from the credit spreads. Credit spreads are a great strategy, but when I have the opportunity, meaning when implied volatility gives me a good entry point, and if the underlying is underneath, $60 or so, that allows me to get into those undefined risk trades and get my feet wet before. I'm not going to be trading any strangles in the S&P 500. I'm not going to go into IWM or TLT just yet. But what you'll see on these strangles here, and I would recommend this because it's a great learning activity for any new options trader, is to give it a shot going undefined risk with low price securities. And I'll show you why. We'll put on another trade just so you can see why it's not a big deal. So XLF, I put on a 1 standard deviation strangle, a little bit tighter than 1 standard deviation here, and that's doing well at 28% winner right now. KRE is a regional bank, and I put this one on fairly recently, and that had a nice drop in volatility recently, as did most things. And so you can see over here, make sure I'm not blocking it. You can see over here the implied volatility drop over time. That jumped up 25%. And XRT I'm almost excited for XRT to test my short strike here. So you can see he's creeping up in this direction, as is the vast majority of the equity market. And my short strike is here at 44, or I kind of missed the mark there. So part of my management strategy, which is currently just taken out of the textbook, is when your short strikes are breached on a strangle, you want to roll up your untested side to that 30 delta mark, wherever that may be, once that activity has happened, once that movement has happened. And what that's going to do is lock in some profits here, and it's going to reduce some of your directional exposure, because right now, if you look on my XRT position, this should be a delta neutral strategy, and right now I'm short 31.5 deltas. So I definitely need to hedge that if this continues to go the other way. I know I'm going pretty quick through all this, guys, but I hope this is helpful for you, at least in looking at my thought process and how I'm going through my trades one by one. FXE, prior to the election, I placed a neutral strategy. This was a dynamic iron condor. So if I go in, I want to just make sure I don't tell you wrong. So I'll go into my trade journal and look at FXE, and you'll see kind of how I'm opening up my trade journal here. So I'm using a dynamic iron condor with the 25 delta shorts and 10 delta longs. And that's why you can see that skew, because there was some downside skew in FXE recently. And that was a lower probability of profit trade, 58% probability of profit. But again, took in a pretty good credit. And if, given the fact that the stock price is moving up in the upward direction, I might have an opportunity to roll up my puts or potentially roll out in time for additional duration. I would have put on a strangle on this one because the implied volatility was at 99%, but this happened, I believe, before the expiration cycle was over, and I did have some margin tied up with my other positions that I was just waiting to expire. So unfortunately, I wasn't able to go for that, but next time. IWM, another iron condor. This was just a straight $5 wide iron condor, which again, like everything else, is being tested to the upside because of this incredible market move we've been having recently. So, which is good for my wife because still the vast majority of our money is in long stock positions, the 401k and things like that. So market neutral is the long-term goal, but right now it's kind of good we're not. So IWM, it's also being tested. I'm going to be, if we open this guy up, you can see that I'm in the May expiration. So 24 days to go. So if this sticks around, this short strike, probably the best case scenario for me right now is if this hangs out right around here. When I hit that 21-day mark, I'm going to look to roll out in time and move this out to June, and should be able to do that for a profit or for a net credit, which will give me some more duration to let this thing fall back and let people get their heads on straight and start having a two-sided market. Wrapping up here, this was a trade I put on today, XLI. I had, prior to today, let's open this up. So prior to today, I only had the calls on. So you can see my mechanics for call spreads is when the break-even point is tested, that I want to go ahead and sell a corresponding put spread against it. It's a created position like this, which should look familiar if we go ahead and put the entire position on. So I sold the iron fly, and that was because it was right around the 30 delta anyways, given where the stock price was at the time. So by selling the iron, the corresponding put spread, I received some credit that extended my break-even points. As you can see now, I'm still within my profit window on this trade. Did not increase my risk at all, actually reduced my maximum risk on the trade, and that's about all I can do on this trade. It's not going to be able to be rolled for a credit out in time, so it's kind of one of the reasons why I'm not too pleased with credit spreads right now. EFA, same situation. I tried to do the same move here. I tried to sell this put spread, didn't get filled at the price that I wanted, so I'm going to go in tomorrow and hopefully have a drop back. If the price does drop down significantly, I might hold on if I come back into my profitable range, but if I continue to have a little bit of a pullback, I'll go ahead and try to get that filled again. And then finally, the Qs. Again, this is me picking direction. At the time that I put this trade on, I was long delta, so I needed something short to bring my portfolio back into balance. So I sold a debit put spread, which means that I paid to put on that put spread with an in the money option and out of the money option. It's just gone against me from the beginning. Implied volatility hasn't really helped me out a ton, and yeah, as you can see, the direction is wrong. So we'll look for a pullback on this. If I ever get down to a break even, I'll definitely close it out just because I don't like this trade anymore. But given that it was a debit, I can only lose $100 on this trade. So it's nothing to lose sleep over. It's a great lesson along the way. But given a lot of the market measures that I'm going to be publishing something to help people out in summarizing all the market measures that have been going on recently. Even though implied volatility is not always high, obviously, it gets lower and it stays low for a long period of time, it still pays to sell premium, and buying premium is still very much a crapshoot or just a directional play. The statistics and the history does not support buying premium just because IV is low. It doesn't have any real additional benefits over continually selling premium. So I'll be talking more about that now, or later on, but I want to make this a shorter video. So that's what's been going on in my portfolio. I hope you guys are having as good of luck, or at least better luck than me. I'm not held back by it. This is definitely a tuition month for me. I'm giving back a little bit of the lessons that I learned, but also it lets me know that there's a lot to advance in this world. So that's it for me, guys. Hope you guys have a great evening and have a great rest of the week. I'll be checking with you later on. And if you like the idea of tracking your trades, which you should all be doing, by the way, in the description, I have a link for a couple of different versions of trade tracking that I made another video on actually earlier today. So check it out. Click on the link, subscribe to my YouTube channel. I just want to create that community where we're learning how to trade options together. So that's it for me, guys. Work hard, stay humble. I'll see you guys in the next video. Bye.